Good morning, everyone. Hope everyone is doing well. Welcome to today's session. In the session, we are going to focus on Learning Unit 5. So we're going to do a revision question regarding recording credit and sundry transactions. And then in the second part of this session, we are going to start looking at inventory. Okay, so just quickly, just to remind you guys that you have an assignment due on the 4th of May. I had a question regarding the answer sheet. So for this year, they have not provided an answer sheet for you guys. They have indicated that you guys have to create it yourself. I believe the reason behind it is for the similarity reporting, that if they haven't given you a template, that the similarity reports won't be as high as it used to be in the past. So for that reason, you guys will have to create your own. And then secondly, the assignment needs to be typed out. It cannot be handwritten, so you have to physically type it out. And then just remember to make sure that you include an in-text referencing and bibliography. And if you are converting it to PDF, just make sure that if you've included tables, that the tables are not cut off. Because if I can't see the information, I can't assign you a mark. Okay, so that's just regarding your assignment. And then for your test, just to remind you, your test is on the 23rd of May, and it will be written on campus relating to learning units 1 to 6. So everything up to what we do today and in the next session will then be covered in the test. So you guys can actually start studying for your test in the meantime. Okay, so these are just the learning objectives regarding Learning Unit 5. So the main thing you need to know is you need to be able to complete the journals and then transfer that information to your general ledger, and then from the general ledger into a draft trial balance. That is the main aim of this learning unit, or to transfer it in the accounting equation. So before we start, let's just quickly recap again where we're at. So if we look at the accounting cycle, we start off with the transactions. So that is, the transactions is the information that you find on the source documents. And that we already discussed in Learning Unit 3. Then in Learning Unit 4 and Learning Unit 5, as well as 6, we are discussing the individual journals. Now those transactions then get transferred into the journal. So we go capture them, record them into the journal entries. So for today, the ones we are looking at is more your credit and your sundry transactions that got transferred into your credit and sundry journals. So that means in your debtors journals, your creditors journals, debtors allowance, creditors allowance, and your general journal. Then once we've completed those journals and we go sum them, so we get the totals for each and every column, then we transfer that information to the general ledger account. Now remember, the general ledger account, we transfer the total information. We do not transfer the individual transactions information to it. And then the account name would be the same as the column that you transferred into the general ledger. The only exception is if we transfer the main column, we would generally have sales and VAT, or trading inventory and VAT would be our account name, because of the fact that that amount would be generally split into 2 or more accounts. So for those situations where the amount constitutes more than one account, you would indicate both account names in your account description. And then the last thing is, once we've totaled and we've balanced all of those general ledger accounts, those balances then get transferred to your trial balance, and that is then captured on the trial balance. Now remember, your trial balance has a debit and a credit column, and that is split up between your statement of financial position and your nominal account, so your income statement account. And that information, whatever's on the debit side column, if you add all of that together, should agree to what is on the credit side column if you add all of that together. Okay, so this is just where we're at in the accounting cycle and how the transactions flow together. Then if we talk about the journals, these are the various journals. Now remember, your cash increases when we look at the cash book receipts. Your cash decreases if we look at cash book payments. Your petty cash payments will decrease your petty cash. If we look at petty cash journal, your credit sales goes to your debtors journals, and your credit returns and rebates on sales goes to your debtors allowance journals. Your credit purchases goes to your creditors journals, and your credit returns, rebates on returns will go to your credit allowance journals. Now remember, debtors allowance and credit allowance journals is the returns that were captured in those respective journals previously. So if it was captured in the debtors journal, it would go to a debtors allowance journal. If it was captured in the creditors journal, it would go to the creditors allowance journal. And then anything else that doesn't fit into those previous mentioned journals will go to your general journal. Okay, so this is just to indicate what is seen as cash journals, what are viewed as credit journals, and what are seen as the general journal, just for reference sake. Okay, now here are a few steps to help you complete your journals. This you can apply for your cash journals, your credit journals, as well as your inventory journals. It doesn't matter which one, the steps will remain the same. So the first step is you have to identify what type of journal are we looking at. So what category? Is it a cash, a credit, or is it another journal? Then you have to decide which accounts in the journals are affected. So what are the accounts or the columns that will be affected by this information? And that is what you would then capture the information under. So that would it be bank? Would it be debtors control? Would it be sales? Would it be VAT? So this is what we mean when we say decide which accounts or columns are affected. Then you start with the main column. So if it's a cash journal, the main column would be cash or bank. Petty cash would be petty cash. If it is a debtors journal, it would be debtors control. Now remember, the main column is always inclusive of VAT. Then you take the VAT component out by multiplying with 15 over 115, and then the remaining amount you put in the rest of the other column that you've identified, which is not the VAT column. Then you do this for all the transactions, and then once you've done this, then you total the columns of your journals once you have completed each and every transaction. Now remember, your main column should match your other columns. So that means if you add up all the other columns, you should tie in exactly to what amount is in the main column. The only exception is the cost of sales column, which is a standalone column which does not apply to these rules. Then once you've totaled it, then you post each column to the name as indicated in the column name to your general ledger accounts. And then you do that for all the journals, will go to the same T account if the name is the same. Okay? And then once you've taken it all to the general ledger account, then you balance and total the general ledgers, and then you transfer that to your trial balance by creating a list of all the accounts' current balances. Okay, so before we move on from the steps, do you guys have any questions regarding the list of steps that you need to follow when completing your journals? Okay. When we get to the general ledger, what is very important, this is just a summary to help you guys navigate the general ledger. Now remember, when you take a column, you would either post it to the debit side or the credit side of your general ledger account. It will not go to both. The only exception is the cost of sales that has a debit and a credit entry. Now on the right hand side, I've indicated which journal, what is the main column that will be debited or credited, and what would happen to the other columns to help you guys. Just remember how to disclose it in your general ledgers. And then lastly, your trial balance is split up as follow. In your statement of financial position, we would account for all the assets, liabilities, and owner's equity. When your nominal section, we will account for income and expenses. Okay, now this is just a summary of everything else that flows into this information. And it is very important that we have the summary information at the end of the day to help us make important decisions. Okay, so what we're going to do now is we are going to work through the revision question. I'm going to put it up on the screen shortly, and then we are going to complete this. So let me just stop sharing here. Okay, I'm just going to put it up on the screen so long. You guys can just read through the information quickly. I'll be back in a few minutes. Okay, so let's go through the information together and let's see what information that we provide to you. Okay, so let's start with what are we required to do. So we are required, they want us to do the debtors journal. They want us to do the debtors allowance journal, the creditors journal, and then the general journal. So we've got 4 journals that we have to complete. And then they want us to do the general ledger accounts. They tell you inventory has a balance of 265 and you have to balance the account, and debtors control has a balance of 34,000. You do not have to balance the account. Okay, so that means we need to do 4 journals and we have to do 2 general ledger accounts. Okay, let's go through the information and then we'll go capture this. Okay, so they tell you Natasha Naidu runs her own business, Good Beauty Products. Good Beauty Products trades in national skincare products and is not a VAT vendor. Okay, so they tell you it's not a VAT vendor. This is very important. When they tell you it's not a VAT vendor, then we cannot claim the input VAT and we do not raise output VAT. We use the perpetual inventory system. Okay, so perpetual inventory system, inventory is going to the asset account. Okay, the following transactions amongst the other took place during April. We purchased merchandise from nature suppliers on credit. Okay, so if we buy something on credit, it's a creditor's journal for 265,000 less 5% discount. Okay, at what value will we bring this into our books? The merchandise we've purchased, at what value will we bring it in? Okay, if I tell you we purchased something at 265,000 less 5% trade discount, what value will you capture it in your records? Okay, we are not going to capture it at the full value. We will capture it at the 95%. So what we've actually paid for it will be recorded. Okay, then we've got credit sales of merchandise. Okay, so credit sales would be debtors for 1,445,000, and there's a markup of 25%. Okay, markup, remember, is on cost price. So it would be cost price would be 100, markup would be 25, and sales price would be 125. Okay, then we say they returned unwanted goods and issued a credit note for the value of 25,000. Okay, then inventory was sold on credit to Chen Chao Chan for 59,400. There's a gross margin markup of 20%. Okay, so gross margin is on your selling price. So that means your cost price would be 80, your markup would be 20, your sales price would be 100. Then we've got beauty product signs an agreement with an advertising agency to run 6 adverts over the next 6 months. The cost of the advertisements is 25,600 and will be paid at the end of the 6 months. So we did it on credit if we're only paying it off at the end of 6 months. And then we gave Chencho a settlement discount of 3,000 Rand. Now, because it is a settlement discount subsequent to the time, this will go to our general journal. And then we received a letter from Tamara stating she is insolvent and her debt will be written off. So it means she won't be paying anything. So this would also go to the general journal. And then we realized that stationery purchased on credit for 21,000 was accidentally recorded to inventory, so this is a correction of error. Okay, so let's go look at the journal entries first. So I'm going to stop sharing this and then I'm going to share the Excel file. Okay, so based on the information, I'm going to read what the information was again. It is on VC Learn if you want to download it there. Okay, so the first entry, we said we purchased merchandise from Nature Suppliers on credit. So we said when we purchase something on credit, it is a creditor. Okay, they did not give us any document numbers, so for that reason, we will not complete the document number. Okay, ma'am, what makes the cost price to be different? Like the 4th is 100 and the other day is 80. Okay, so the reason why it's different, Siliwe, is because of the fact that the one is a markup. Now, when it's a markup percentage, it is the markup on my cost. Whereas if we talk about a gross margin, it is a markup on selling price. Now, if it's on cost, the cost would be 100, and then we add the profit percentage to it. So that's why the first one was 100 plus 25 gives you 125. Then the second one is a gross margin. So the profit was on the sales price. So the sales already includes the profit percentage. So that is why it's 100. And then you have to deduct the 20% profit that's included in that 100 to get to the cost of 80. Does that make sense to you? Okay. But if there's anything else, Jen, just ask me. Okay, so we've got Nature Suppliers. And we said we've got 265,000 less 5%. So what are we going to capture in here? is the 265,000 times 95%. Okay, let me just add a column in here to show you. Okay, so that's how we worked it out. Okay, so we take the trade discount into account. Now, because of the fact that we said we are not registered for VAT, that full amount actually goes to the trading inventory and no amount goes to input VAT. Okay, does that make sense? Do you understand why we're not accounting for VAT? Okay. Then on the 4th, we had credit sales to Tamara Taylor of 145,000. Okay, so credit sales goes to your debtors. Okay, so we've got Tamara Taylor, 45,000, 145,000. Now that markup percentage is important to work out the cost of sales. Now we said we do not have VAT, so the sales would be 145,000. Now to work up the markup, how we work it out is we take that 145,000. Just gonna unhide it here. Okay, so the 145,000. We said markup is 25%. So we want to know what the cost is, which is represent 100 over 125, will give us the 116,000. Okay, so let's just type this in here again. Markup sales price. So we said markup percentage means profit on cost. So the cost is 100, our profit is 25, so our sales would be 125. Now to work from a sales value, which is the 125, back to 100, we have to divide this by 125, and then we multiply it with 100 to get to 116,000. Okay, then on the 14th, Tamara Taylor returns unwanted goods, so that goes to our debtors allowance. Now remember, with that, you also have to, when you return the goods, you also have to do the cost of sales component for it. So it's the 25,000 times 100 over 125 will give you the 25,000 for the goods that were returned. Then on the 14th, inventory was sold on credit to Chen Cho for 95,400. Okay, so that is also debtors control. Okay, but this one says it's the gross margin. So if we talk about gross margin, how this one will be different. Okay, so if we say gross margin, then your sales would be 100. Your profit would be 20, and your cost would be 80. Okay, so to work it out, you're going to take the 95,000 times 80 over 100 will give you the 76,320. Okay, then on the 25th, we bought advertising cost, but we're only paying for it 6 months after the fact. So that is where we buy it on credit. So that would go to our creditors journal. We would include ABC agency fee, and it will go to advertising fees, that's 25,600. Then on the 27th, we Okay, I'm just going to take a 2-minute break quickly. I just want to get something. My blood sugar is just dropping. I'll be back in a minute. Okay, apologies about that. Okay, so then on the 27th, Good Beauty Products gave Chin Cho Chung a settlement discount of 3,000 Rand. Now, because of the fact that he gave discount and it does not fit into the other journals, we will have to capture that transaction into our general journal. Okay, so what we'll have to do is we reduce the debtors balance and we then reduce the sales value with the amount that this should actually go to sales. Sales debtors control is the settlement discount. So we're reducing the sales value that because they haven't actually paid us that, they've paid us less than that amount. Then we received a letter from Tamara Taylor saying she can no longer pay us. Now let's quickly go back. So what does Tamara owe us? She owes us 145,000 less the 25,000. So she owes us 125,000. That will then be written off in our general journal as well. So we debit credit losses, we credit a debtors control with 120,000. And then the last thing is we realized we made an error that we also correct here. So instead of the stationery we've purchased, we took it to inventory instead of stationery. So we have to reduce our inventory balance and we have to increase our stationery balance to correct the error that happened in March. Okay, then the last bit of information that they've asked us for was to do the general ledger accounts. Okay, so if we read the information, they said that the inventory had a balance of 265. Okay, so our inventory has a debit balance of 265. Okay, and our debtors control had a balance of 34,000. Okay, so that is our balances. Then we transfer the totals from what we've captured. Okay, so let's first go total all the accounts before we can complete it. Okay, so the first one, we know for debtors control, we've got 240,000 that came from debtors journal. Okay, so we increase our debtors control with, sorry, that's the purchases, with total sales and VAT for 240,400, which comes out of here. Okay, then we returned 25,000 that we need to account for. So we are going to reduce our debtors control with 25,000. Okay, then the next thing we've got that affects that is we've got a trade settlement discount and we've got our credit losses. Okay, so the first one is okay, so the first one, we've given them 3,000 discounts. So they have paid us 92,400, which is the 95,000 less the 3,000 discount. Then we've accounted for the 3,000 discount, which is in our journals. Okay, and then we have the written off the credit losses as well. Okay, now they said we do not have to balance this one. So that's all we have to account for. Then if we go back to the journals, for our inventory in our creditors, we purchased 251,000 inventory. So we increase it with inventory. Let's see if we've returned anything. We made a correction, so that also needs to be accounted for. And then we go balance the rest of the account. And there we go. Okay, and that is how you had to do the journals as well as the general ledger accounts. Okay, do you guys have any questions on this? Okay, I'm just going to share my slides again. Okay, do you have any questions on Learning Unit 5 on its own, or are you comfortable with what we've discussed so far?